Hey guys, welcome back to the channel, and guys, how crazy is this? This is our 8th episode of the 365 Days of Forex series, and going off our YouTube analytics, you probably aren't even subscribed yet. In this video, we'll be discussing what makes a good Forex broker, discussing a few of the more immoral practices that brokers enact, as well as finding out which Forex broker will be best for you. So without further ado guys, let's get into today's video. So, probably a good place to start would be a look at what a Forex broker actually does. A Forex broker is a company that buys and sells financial instruments like currencies or stocks on behalf of retail traders. Brokers will usually charge a fee for this service, either through the spread or a fixed commission. Of course, different brokers will charge different fees for this, whilst many actually make more money in other ways. Forex brokers can be split into two groups: dealing desk and non-dealing desk, and then further split again into STP and ECN. Let's now check out what these actually mean. A dealing desk broker, which can also be known as a market maker, essentially provides liquidity for its traders by matching them up to other traders also trading with this broker. Simply, a dealing desk broker will keep the orders in-house and allow traders trading with the same broker to match up against one another. One of the main outcomes of this is that the market of potential buyers to your sell trade is much smaller, and hence sometimes there may not be anyone to take this side of your trade. In this circumstance, the dealing desk of the broker will actually take the opposite side of your trade, and this is where the idea that your Forex broker is always trading against you actually comes from. Whether or not your broker actually does this, I think everyone can agree that it creates a potential conflict of interest, as the broker will lose money when your trades win, but will also make money when your trades lose. A bit dodgy, right? Well, now let's check out the opposite, which are non-dealing desk brokers. Non-dealing desk brokers are exactly what they sound like. They don't have a dealing desk, so they can't take the opposite side of your trades. Instead, they will connect your trades to the interbank network, which allows your trades to be executed by liquidity providers such as investment banks. Unlike a dealing desk broker, there's almost zero conflict of interest between the client and the broker, as they're only acting as an intermediary. We can split non-dealing desk brokers down into even further categories of STP and ECN brokers. STP stands for straight through processing. This type of broker is a bit of a hybrid between a dealing desk broker and a non-dealing desk broker. STP brokers will try and execute your orders in a certain time frame, ideally matching your order up to another trader, but there is also the option for the broker to take the other side of your trade. Therefore, brokers often discriminate between traders based on observable characteristics such as what market they're trading on, risk management and account size, and then decide to take the opposite side of your trade if they deem you more likely to lose. On the other hand, if the STP broker deems you are more likely to win, they'll instead just match your orders up against other traders rather than take the opposite side themselves. Obviously, whether or not there is a conflict of interest comes down to whether you're deemed to be a winning or a losing trader. If that's the case, there's no conflict of interest if you're winning, however there's definitely a conflict of interest if you are a losing trader. ECN stands for Electronic Communication Network, and they match buyers and sellers up together with no room for the broker to take the opposite sides of people's trades. Now we know the different types of brokers, let's see the positives and negatives of them both. I hope it should be evident by now that ideally you should only be looking at a non-dealing desk broker, which already narrows the pool down to STP and ECN. So therefore the question becomes, should I use an STP broker or an ECN broker? To help you out, here's a little infographic on the screen right now that shows the positives and negatives of each. As a little summary, STP tends to be cheaper and trades are quicker to execute. However, there is a potential conflict of interest between you and your broker. On the flip side, ECN brokers do not trade against their clients, but orders typically have a wider spread and are slower to execute. There are also brokers which combine STP and ECN, but it's sometimes difficult to determine what this combination actually means. In summary guys, what type of broker you actually open an account with, like most things in trading, comes down to you and your own preferences. For me, I prefer trading on an ECN broker, but I've used a combination of ones in the past. Let me know in the comments which broker you use and whether you think it's a good choice of broker or not. Cheers guys, now we'll see you in the next one.